Good afternoon, everybody, and welcome to today's webinar with Carrick Wealth and SevenCapital. I'm Andrew Moore, joining you from Carrick Wealth in Harare, and joining me today I've got Craig Warwick, who heads up SevenCapital in Southern Africa, who we work very closely with from a Carrick perspective in Southern Africa, and of course from Zimbabwe. So Craig, thank you very much for joining us today.
Thanks, Andrew.
And today we'll be running through SevenCapital's flagship opportunity property in Bracknell called the Grand Exchange. We've had a lot of take up on this particular development from a Zimbabwean perspective already. And I know I'm mentioning a lot about Zimbabwe. If you are not from Zimbabwe, don't worry, this will still be relevant to you, and you should take a lot away from it. So Grand Exchange, amazing opportunity just in Bracknell, and of course Craig will take us through that. But the facilities this has, the connectivity that it has through to the Commuter Belt in London, and of course most importantly from our perspective, the investment case that comes along with it. So we will ask questions at the end. If you can just post those as we go, please be as engaging as you possibly can, and we'll answer all the questions towards the end, which I will collate and pose to Craig. All right, and nothing further from me, Craig. If you want to take us forward.
Yeah, Andrew, thank you very much. Good afternoon, everyone. Thanks from my side as well for taking the time to join us today. We're very excited to be presenting to you, and equally excited about our partnership with Carrick, and especially Carrick in Zimbabwe. So yeah, I'll obviously walk us through everything. First up, just to look at a UK property market update, just to give the market and the investment case as a whole some context. Prices remain very competitive in a global context in the UK and specifically the buy-to-let space. There is an 8.8% increase of prices over the past 12 months in a relatively volatile market coming out of COVID, etc. So there's definitely growth in the marketplace in the property space in the UK. 19% predicted property price growth out of London Commuter Belt over the last 5 years. There is a massive trend, and you can see it all the way from government investment, the likes of the Crossrail system, for example. You can see the investment and the amount of growth taking place outside of London, just on the Commuter Belt, towns like Slough and Bracknell, which we'll be speaking about today. The average UK property price is currently at around £260,000, and around 4,000 new homes per year needed by 2030 to meet the demand. At this stage, I think we're way off those figures, so there definitely is an undersupply and a massive amount of demand, which essentially, as you know, as you guys will know, is almost the perfect landscape for an investor. Race for space, just looking at the trends in the marketplace over the last 18 months, people have definitely reevaluated, and this is globally, but specifically speaking to the UK, what they need in terms of their homes and the setup. More and more tenants are looking for extra space, an extra bedroom, and potentially outdoor space as their ideal home. That is obviously largely attributed to the massive work from home culture coming out of the COVID pandemic. So we are seeing a rise in demand for 2 beds. Historically and still at the moment, 1 bed rental apartments are the lion's share of the market in terms of demand. But as I say, that 2 bed space is definitely increasing in demand, and we're starting to see that come through. Renting is the best option for the first time since 2014. It's now cheaper to rent than purchasing property, and that is creating what they call generation rent. There's a massive movement of young professionals coming through that would rather rent a property than purchase a property outright. And there's a number of factors attributing to that. First off being the cost, the transactional costs. They don't necessarily have the necessary funds for the deposits. based on what the lenders are offering as far as mortgages go. But they also want to be as fluid as possible and focus more on the lifestyle elements and proximity to their working space. So why Bracknell? Just looking at the town and the city as a whole, world-class employers, and I'll get into each of these a little bit later in the presentation, but essentially Bracknell is in the heart of and is the epicenter of the Silicon Valley for the UK. All the massive tech firms are headquartered there for the UK, and in some cases headquartered in Bracknell for the whole of Europe. It was cited by Boris Johnson as the epicenter for free trade. So there's a massive amount of commercial growth currently underway and picked for the next couple of years. And obviously that's a major driver in terms of tenant demand for prime locations and properties like the Grand Exchange. Over 500,000 easily accessible jobs across engineering, tech and financial sectors in the county. In terms of the connectivity, from a rail perspective, Wokingham, 11 minutes, Reading, the closest major city, 22 minutes currently, Windsor, 23 minutes, and London Paddington Station at this stage, 51 minutes. So there is commutability, as well as obviously to Heathrow Airport. That is going to be enhanced further during this year with the full launch and implementation of the Crossrail system. The Crossrail system, just for those that don't know, takes you all the way from the west on the Commuter Belt in Reading, all the way along the Commuter Belt into the heart of London within minutes. So that's a £20 billion government investment in terms of the rail upgrade. And as you can see, Bracknell is very close to Reading, so you would be able to connect onto the Crossrail system, taking you either to Heathrow or into central London, prime location and stations in London in limited times. Increased tenant demand. Bracknell is growing on average 2.5 times faster than the wider economy in the UK. Originally, the town was built for 25,000 residents, and it's currently home to a population of over 120,000 residents. So you can imagine that there's a massive amount of rental and tenant demand in the region, and that's set to grow over the next couple of years dramatically. So that speaks into this generation rent culture that's taking place holistically across the UK. Looking at a bit of call it a lay of the land. If you have a look at the fourth pointer, that is the Grand Exchange location. You can see it's smack bang in central Bracknell, and then you've got your major retailers, major businesses, all your big tech firms, etc., scattered around throughout Bracknell, well within walking distance. In addition, the centre, the Lexicon Centre, which I'll show you shortly, is a massive £250 million retail and leisure development that is completed around 2-3 years ago. So you've got everything on your doorstep, from the top end retailers to all the best restaurants. There's no reason to travel outside of Bracknell for the commercial elements, the lifestyle elements, and obviously now the residential with an offer like the Grand Exchange. Bracknell property performance, past and future. Average value of a house has risen by 249% in the last 2 decades in Bracknell, 28% in the last 5 years. The population as a whole, as we saw earlier, is rapidly expanding, and that's set to increase by another 18% in the next 20 years. Over the past 10 years, property prices in Bracknell have increased by close to 50%. And they're forecasted to increase by a further 18% over the next, call it 4 years. Bracknell rental prices are set to rise by around 8% over the next 4 odd years as well. So not only will you see strong capital appreciation, good tenant demand, but you're also going to see strong rental yields coming through, and growth on those rental yields year on year. So looking at the commercial drivers in Bracknell itself, as I said earlier, it's been pinned as the epicenter for free trade. It is officially the hub of the Silicon Valley for the UK. And if you look to the right, just an example of some of the companies: Dell, Microsoft, Fujitsu, Oracle. These are all big tech firms headquartered in Bracknell. nearly 50% of the population in Bracknell are in senior management and director roles. So these are highly paid tech professionals, perfect profile tenant for a landlord. And in addition to that, which isn't shown here, the average salary in the UK on average per capita is around 28 to about £30,000 per annum. The average salary in an area like Bracknell is 45,000 plus. So these are stable, employed tech professionals in a sector which, granted, isn't bulletproof to the likes of COVID and the impact of COVID on the commercial side. But we are more reliant now than ever on the tech industry and sector. So it is robust compared to other regions in the UK because of these tech firms. In terms of the tenant demand and property prices, as I said earlier, originally built for 25,000 residents, now a population of 120,000. Apartments have already seen prices rise by around 30% plus over the last 5 years. And the average price currently sitting at around £380,000. There's been massive growth over the last 20 years, and that's definitely going to continue over the next 10, 15 years with this regeneration plan taking place with local council. Connectivity I touched on, but the three main points here highlighted. 22 minutes to Reading is the closest major city. As you've seen, there's a lot of commercial opportunity in Bracknell itself, even more so in the wider county in cities like Reading, which is very commutable. So great connectivity, great proximity to a major city, as well as obviously the commercial drivers on the ground in Bracknell. 24 minutes to Heathrow. A lot of the profile tenant we're dealing with in this market, a lot of these guys consult, travel, etc., etc. So they need that connectivity to Heathrow from an international travel perspective. And then 51 minutes currently by rail into Paddington in London. Just looking at the connectivity, as you can see, Reading far left, as your closest city, Bracknell and the Grand Exchange, in between Reading and Heathrow Airport in London itself. But the infrastructure is all in place from a rail perspective, from a roads perspective. In addition to that, part of this regeneration plan in Bracknell is going to incorporate road infrastructure and highway connectivity infrastructure upgrades. So you're going to see enhanced connectivity over the next 10 odd years as part of the council plan. In terms of the regeneration, if you look to the right, this gives you an idea visually of the Lexicon Centre. I spoke about earlier, £250 million worth of leisure and retail development that's happened on the doorstep of the Grand Exchange and smack bang in the centre of Bracknell. All the major fashion brands, all the major retailers, restaurants, you've got absolutely everything on your doorstep. I've been to the site, it is phenomenal. So there's no reason why anyone would want to kind of leave Bracknell for the leisure elements of what's on offer as well. In terms of the holistic view of the regeneration, just to show you guys what that looks like. Close to £1 billion worth of regeneration. If you look at the top left-hand aerial shot, that grey area is the Lexicon scheme, the Lexicon Centre that has been developed and is complete. In addition, there were bus station improvements and town centre public realm improvements as well. Really fresh, amazing looking city. When you go there, you can see that renewal taking place right now. Looking at the short-term view below, you can then see in the top left-hand corner of that block, there's the blue icon with the gold cross through it. That is outside the Grand Exchange. So you can see at that stage, it is within this development plan, this council development plan. Very important to point out, the Grand Exchange is the only development that's been approved by council in this 15-year regeneration plan that is for sale to investors like yourself and to homeowners. Every other development is owner held and rented out by the developers or pension funds, etc. So this is the only opportunity, and it is head and shoulders above anything on offer in the area. Looking at the mid-view top right-hand corner block, you can then start to see the street, the infrastructure upgrades I was talking about taking place. And then there's the fully realized plan 2032 below right-hand corner, and that shows the finished kind of vision and view of the town centre itself with all the infrastructure, and you can see it's built around the Grand Exchange. Right, just some visuals of the current site. As you can see, well underway in terms of the development. We class this or term it as an off-plan development for our buyers and clients. But as you can see, there's no potential risk of it not getting off the ground or not finishing on time. It's well underway. Construction is going perfectly on track for completion end of next year, first quarter delivery to our clients 2023. Apologies. So the site's looking fantastic, and the build quality, as you can see, is on point as well. Right, so getting into the facts and figures. If you look to the right, these are the design elements. Obviously, the first picture is the outside of the building. You can see all the apartments have either Juliet balconies or full terraces and balconies. It's got a central courtyard, private garden space, basement parking, residents only. Top right-hand corner pick, residents only, state-of-the-art gym. Middle picture, a work from home, almost like a think lab or work lab experience. A lot of these guys do contract and work from home a lot of the time. A lot of them might need some time out of their apartment, and this facility is there with all the amenities they could possibly want. The Lexicon Club below is a dining hall / boardroom meeting room that can be booked out by residents and obviously fully catered. And in addition, there are a number of amenities, including full concierge, 24 hours a day, and a spa treatment room as well for residents. So as you can see, this has been tailor-made and built and designed for these high-end professional guys in the tech sector. And they love it. They absolutely love it. Looking at the points to the left, 1 and 2 bedroom apartments available in terms of the configuration. It's an off-plan opportunity, and 10% higher rental deals projected in Bracknell than Reading with a product like this. You're going to see an increased rental yield on time of completion. As I said before, 20 minutes direct commute into Reading. Iconic destination entrance lobby with 24-hour concierge, part of the facilities. Secure gated private parking in the basement, and the completion, as I said before, is Q1 2023. As far as the pricing goes, one bed's priced from around £289,000. To secure, ultimately, holistically, you'd be looking at a 20% deposit, coming in at around £57,000 for a one bed, and a 20% deposit coming in around £72,000 for a two bed. These are there are mortgage options available on these, and I'll get into that service offering from our side. But that gives you a sense of the design of all the amenities and what sets the Grand Exchange apart in a market like Bracknell, and what's given it such great traction. Right, so looking at the investment case or a cash flow illustration. So using a one bed apartment at the Grand Exchange, priced at around £300,000. If you look at the finance summary, it's very typical in the UK, and especially in the investment and buy-to-let space, to go with an interest-only mortgage. That is, as it says, it's you servicing the mortgage or mortgage interest factor only, not the principal debt. And how that works in your favor is every 12 to 15 years in markets like Bracknell in the UK, the property values double. So you're going to be sitting after 10, 15 years with 100% equity in growth in the property, as well as being cash flow positive from day one, and earning pounds from day one. So looking at the figures, assuming a 65% mortgage loan to value from the lenders, the loan amount would be £194,000, interest rate of around 3.5%, which we do see happening in the next 12 months. Monthly mortgage repayment would be £560. Looking at the reservation and exchange costs below that. So to secure, Essentially, we would go through the motions, select the ideal apartment for our clients. We then sign a reservation form. You pay a £2,500 reservation fee, which comes off the purchase price. Your legal fees are around £1,300, and the exchange deposit a month thereafter is a total of around £57,000. So all in, to get on board and to secure your apartment, you're looking at, call it £60,000. We then do the necessary end of next year once it completes, and we get the mortgage in place for you. There would be a residual deposit amount payable on completion, and that comes to around, using these figures, comes to around £15,000. You've got your mortgage fees, furniture, land registration coming in at about £8,000, stamp duty, which is standard, around £20,000. So the total cash required on completion with this sort of deal structure would be around another £69,000. Total cash employed for you as an investor, £130,000, and the balance would be serviced by the mortgage. So if you look at the profit and loss column to the right now, using projected rental yields of £1,250 a month, that's a 5% rental yield. That is a conservative figure. We have seen upside in Bracknell before with previous developments to that. But using 5% as your base figure, your owner costs would be in the following table, would be service charges and ground rent, and then your letting management fee at 8% of £100 a month. So the net income after those costs, you're looking at £993. Further down, financing, your mortgage repayments, as we said before, based on these figures, are £569. That's your repayment. So your projected net cash position after all costs, after everything said and done, is £424 a month, or £5,000 a year. In the final kind of snap there, the investment performance block right at the bottom on the right, what we do here is we map out a 5, a 10, and a 15-year investment case for you. What this allows you to do is look at all of your monthly income, your capital appreciation, take off all of your related costs, and then look at the return on capital employed below in the blue block, based on a net position. If you look at this, you're looking at, in the first 5 years, getting a 46% return year on year, 9%. In a 10-year investment term, 119% return on capital employed, 12% year on year. And then obviously, ultimately, a 15-year investment case view, you're looking at 200% plus and a 14% year return on your capital that you've injected into the investment. So as you can see, it's not necessarily just a case of looking at a 5% rental yield. When you look at the holistic view of the investment itself, it is very solid, especially in markets and products like this in the UK. Right, so why SevenCapital as a company, or as your preferred service provider in partnership with Carrick? Just to give you a view of the group as a whole, obviously various divisions. The total value of the group at this stage is around £6 billion. Probably the most important point here is Colmore Tang. Colmore Tang, as part of our group, is our own construction firm. So you're buying directly from the source, directly from the developer. And what this allows us to do, and in turn yourself, is it allows us to control the build timelines, make sure that they're on time and not massively delayed, as well as ultimately the build quality and making sure that we deliver a superior product, both for our clients and in the marketplace as a whole. Sorry guys, I'm just waiting for the slide to tick over. There we go. Right, so just having a look at the track record. Very important when you're looking at investing offshore, obviously, or in anything for that matter. So far, our portfolio spans around £2 billion delivered. We've got 130 dedicated property professionals globally across our various offices. We have an office, as Andrew said, set up in Johannesburg in South Africa, looking after Africa. So you've got somebody essentially on the ground, same timelines, etc., and at your call at any given stage. and we're virtually supported by obviously our head office in the UK directly. Our portfolio at this stage close to 8 million square feet delivered and around 6,500 units delivered. Right, this is merely, and it won't mean much to anybody, but just a slide just showing some of the completed developments, some of the design elements in these. Important to point out here that all of the product going forward from SevenCapital in partnership with Carrick, every single development will be a brand new build. We don't do any conversions, so they are brand new builds from the ground up. Completed developments, our track record at this stage stands at 100%. Every development we've set out to complete and deliver, we have. And that's very important for yourselves. Obviously, you want to have the peace of mind that what you're investing in is going to complete on time and be the product that we committed to initially. So this just gives you, again, a sense of our track record, close to £1 billion completed across the 28 developments. 9 developments currently under construction, the Grand Exchange obviously being one of them. The importance of this, or the relevance for our clients, is essentially that there will always be, with working with a company like SevenCapital, there will always be a flow of new projects, new developments coming through year on year. So you're easily able to stack up and start growing your portfolio with us as a partner on the ground in the UK. Right, investing with SevenCapital, reservation, exchange, completion, handover, and aftercare. I'll touch on this in more detail in the following slide. Right, so essentially we've built the business almost as a full turnkey investment solution, and we're a turnkey developer. That said, we've got obviously the core product and the development itself, which we build ourselves, and that's essentially our major function. And in addition to that, we've got all our customer-centric services. So not only are you buying directly from the source, the developer, with us, we've then got a panel of solicitors that you could choose from in the UK that'll assist you with the transaction side of things, make sure that you are 100% safe and that your interests are looked after, and that the contracting side of things is on point and obviously, fair and legitimate. So they're available for your use. In addition, we've got our partners, Visionary Finance, mortgage originators in the UK. They will, if you're looking to mortgage the property, engage with you, take the offer to the various lenders and come back with options that we can look at. So it's not necessarily just a cash investment. You can mortgage with us as well, and we arrange that for you. We've then got our furnishings department in-house. So once complete, we would then fully furnish the apartment for you, get it ready to rent, and then probably most importantly along these customer-centric services, on the back end, once it's complete, our partner letting agents would take it to market, advertise it, find the tenant, vet the tenant, put the lease in place, and then manage it for you ongoing. Everything down to your rental collections, paying over your owner costs, and paying the net figures into your receiving account over there. So it's as hands-off as you could possibly want. And very proud to show and say from our side, if you see below, every year on year, we win customer service awards for this kind of customer-centric approach and holistic view that we take with our clients. Just a bit of a visual in terms of our global offices. Most important there, obviously, is the fact that we're on the ground in South Africa, working with the African clientele, and we're able to assist as and when you need us.
All right, many thanks, Craig. So yes, if I can just remind everybody, we obviously want to answer as many questions as we can during the session and keep it as productive as possible. So please, if you've got some questions, post them now, and we'll go ahead and answer those for you live. And perhaps in the meantime, just while we wait for those questions to come through. So, Craig, hypothetically, I am an attendee on this webinar. I'm interested. Talk me through sort of the next steps in moving forward from here.
Absolutely. So it's really a case of connecting with be it the Carrick advisor and ourselves. We'll set up a Zoom meeting, start drilling down into the client's objectives, making sure that we've got the right fit in terms of the product, the timelines, the budgets, etc., and that the investment case ticks all the boxes for the client. We then have a look at the available stock, the floor plans, find the apartment or apartments of choice for the client. And then it's a very straightforward reservation process. It's a 2-page reservation form that gets submitted to us with a copy of passport, and a £2,500 reservation fee secures the apartment, and I'm able to take it off the global stock list. It's then call it a 28-day exchange period. So the solicitors would assist the clients with understanding the contracts, run through all the source of funds checks that need to take place, etc. And then we exchange contracts, and the client then pays a 20% deposit minus the £2,500 already paid, and we then wait until completion. If it's a mortgage client, 3 months prior to completion, we would do the necessary work with Visionary Finance to get the mortgage in place and on the table.
Great. Thank you. And yeah, I think just off the back of that, and from my side, obviously having a webinar is a wonderful means of educating everybody and showing everybody what's on offer. But I don't think that it ever really substitutes for being able to either sit across a desk from somebody or have a one-on-one conversation that is purely unique to you and what you're looking for. So I would encourage everybody, the contact details will be on the next slide, and if you do want to get in touch, then please do. Still waiting on a couple more questions, but also, Craig, I just wanted to ask you regarding your track record and how you predict rental incomes and how you predict capital appreciations. When we look at those figures on a cash flow, what's the sort of science behind that, and how accurate have you been in the past? Maybe if you have an example on that.
Perfect, absolutely. And I think for this session, or for this instance, we'll use Bracknell as the example, being that the Grand Exchange is located there. We delivered a smaller development, although in the same market in Bracknell late last year. We positioned and projected rental yields of 5% gross, 4% net, as per the example I just showed for this development as well. On completion, we were able to pre-let 75% of the stock within 2 weeks, which we've never seen in any market in the UK in terms of uptake. And that speaks into the demand for these modern upscale developments such as the Grand Exchange. In addition to that, we saw rental yields come in slightly higher at 5.8 and 5.9% gross rental yields. That was above projection. All of the figures that we use for these predictions are based on actuals, on independent research, the likes of Savills, JLL, etc., historic figures and actual stats, as well as the fact that we try to position a conservative, realistic view, especially in an off-plan development like the Grand Exchange, so that there's no ugly surprises down the line. There could only be upside, to answer your question, and this is a conservative view to say this is what you can expect.
Okay, yeah, and of course we much prefer it that way. So thanks very much for clarifying that.
Yeah.
So I've had a couple of questions now. Please advise purchase and process requirements for UK non-residents.
Okay, so I think that I probably answered that in the first question that you asked me. It really is a case of connecting via Zoom, whatever the case is, in a meeting with us. And then it's merely a case of choosing the right apartment, doing the reservation documentation, selecting the solicitor, and they then walk you through the contracting process. but it's the timeline is around 28 days in total, and your total cash deployment would be 20% holistically of the purchase price.
Great, thanks. And then we've had an inquiry regarding similar developments in South Africa, and whilst I know that within SevenCapital and Carrick we don't do any property in South Africa, but being based in SA and knowing the property market there and dealing with a lot of South Africans, when you weigh up the two regions, what are the benefits and the selling points of going somewhere like the UK as opposed to South Africa, and recommendations, pitfalls, etc.?
Yeah, so I'll speak into South African space. A lot of our clients obviously are based in South Africa and have local property portfolios, be it small, large, etc. And the key element to anything, I suppose, is diversification. Once you've got a property in your local setting, be it Zim, South Africa, whatever the case is, yes, you can scale that portfolio up, absolutely. But it's always good to diversify, especially when you start looking at a rand-pound hedge. It becomes, even from a forex perspective, it becomes very attractive earning pounds based on the way the rand fluctuates according to the pound. In addition to that, probably the most important factor is, if I look at South Africa as a whole, South Africa has a lot of space, a lot of stock, and a lot of development taking place all the time. So there's an abundance of choice for tenants. You can literally pick and choose what you're looking for at any given price point in any given area. There's a ton of stock, essentially. And what that gives you is lower occupancy rates in comparison to markets like the UK. Now, the UK is in a very unique position where they've actually got a housing shortage, a housing crisis, well documented. And based on that, the occupancy rates in the right market with the right product are extremely high. We see occupancy rates of between 95 and 100% in all of our developments at any given time. And that's because of the fact that there's such a massive demand and such an undersupply. Local council and government just haven't been proactive enough to approve enough new development to keep up with housing demand and the growth in the market in the UK. So it's almost the perfect storm for investors and for landlords to see nice constant tenancy, good demand, good capital appreciation in a pound-based market, first world currency, etc.
Great. Thank you very much. And then we've just been asked just to repeat the total capital requirements for a 1-bed and a 2-bed. I remember the 1-bed was roughly about 130,000 all in, but perhaps break it down now and in the future on each of those, please.
Yeah, of course. Can we go back in the slides?
Yeah, please do.
I think one more back. Right, thank you. All right, so if we look at the bottom figures there, so for a 1-bed at the Grand Exchange, purchase price is 289,950. To get on board for the investment, you would be looking at a 20% deposit, which comes in at around 57,990. So that would be within the first month of getting on board, call it. That would be the cash component, the deposit requirements to purchase the property. A 2-bed in comparison, priced at £359,000, that 20% deposit comes in at just under £72,000. So that is the cash component right now that the client would need to have available. Going to the next slide. Right, so looking at the 1-bed example, in terms of the total cash requirement over the entire investment period. If you look at the first column, third block, reservation and exchange costs, you've got a total there of £61,000. So that would be the total cash component, including all costs, reservation fees, etc., that the client needs right now for a 1-bed. And then the following block, purchase costs completion, you can see there the residual deposit, the mortgage fees, furniture, land reg, and stamp duty is a further £69,000. So in total, cash deployed or cash employed would be £130,000 for a 1 bed, and that's all in. Everything else is serviced by the mortgage. And what we can do in these client engagements, as we start meeting with attendees, is we can run these exercises, these illustrations for any apartment. So once we've identified the perfect apartment for the client, we run this live exercise for that specific apartment and the client's specific objective.
Thanks, and I think that's important to emphasize as well, is that this is not a small purchase for anybody by any means. So it's important to know that you do almost get your hand held through the whole process. We sit down, identify what fits within your budget and your appetite, and whilst looking at this and all the numbers may seem a little bit daunting, we do go through it quite meticulously just to ensure that you fully understand how it all works, what it's going to cost, what the likely returns are going to be. And as Craig alluded to earlier on, we are conservative when it comes to the projections and the returns that we work on. Last question I've had so far is, will the recording be sent out? Yes, we will be sending out the recording that will be made available to you all. So if you want to go back, watch anything, if you've got more questions, then please reach out. So for those of you who don't know, Carrick Wealth is based in Sam Levy's in Warwick, which I'm sure everybody from Zim will be familiar with. So pop into our office, come see us in person, and of course, if that's not an option, then we're in a world of technology and Zoom, and Craig and I would love to jump on a one-on-one call with you all.
Absolutely.
All right. Okay, great. So I think that being it, I'd just like to thank you all for joining, and Craig, thank you very, very much once again. Love the Grand Exchange, and look forward to picking on all the feedback with the attendees moving forward.
Absolute pleasure. Thank you, Andrew, and thank you everyone for taking the time today.